CQS, Natural Resources, Growth and Income, or CYN, is a smaller mid-cap focused commodities fund invested actively across the materials and energy sectors by a specialist team of commodity investors. A highly active approach, smaller mid-cap focus, and a diversified remit that cuts across sector boundaries are all features that distinguish the trust from passive ways of investing in commodities and from its active peers in the closed-ended fund space. Investing in energy as well as mined commodities in particular sets the trust apart from many commodities funds. Over a third of the fund is invested in gold and silver miners as of the end of March, with almost 31% in oil and gas. Entering the year, around half was in gold and silver and only about 15% in energy. This quick rotation reflects some price movement, energy has rallied, but also the tactical approach, which has seen the portfolio rotate meaningfully between different segments and commodities over the years, led by the opportunities. For example, base metals made up a high percentage of the portfolio in the 2021 recovery from the pandemic. However, they were then sold down and remain at a low level of exposure. The gold weighting was built up over 22 and 23 when the gold price moved, but the miners remained weak as cost pressures weighed on cash flows. The pickup in the energy allocation is a more recent phenomenon and has really helped in 2026. So this is a highly active fund, and one position that sets it apart from many peers is the weighting to uranium. Uranium makes up only around 2% of the global mining industry by market cap, so it's an afterthought for many managers in the sector, but it is around 12% in CYN. The core of the investment case for uranium is a well-established supply deficit emerging over the next 5 years. China is expanding its power capacity, and Western nations are beginning to follow suit to handle the power demands of AI. The view on nuclear is expressed via some stocks of very high conviction, meaning that at the stock level, not just the top-down level, the portfolio is very different from any passive index. On the other hand, the portfolio is quite light on copper and industrial metals, in contrast to many other funds in the sector. The view is that copper is less dependent on AI and renewable energy demand than some analysts believe, and cyclical economic weakness is a greater risk to the downside. CYN is the top performer in the ASC commodities and natural resources sector over the past 5 years. 2025 in particular was a great year for the whole sector, with a weighted average return being over 100%. In that year, gold and uranium miners strongly outperformed, which helped CYN, as well as some of the specialist funds in the sector, to deliver handsome outperformance of the energy and mining sector indices. 2025 followed 2 subdued years for commodities. Weak global growth weighed on industrial commodities and energy, while the gold miners didn't respond to rising gold prices until early 25. But the exceptional returns in 25 for CYN were mainly from this sector, with the contribution from uranium. Gold miners benefited as inflationary pressures subsided, allowing higher gold prices to feed through into cash flow. Uranium rallied as mega-cap tech stocks invested in nuclear power to meet the demands of AI. While miners were the source of most of 2025's alpha, the managers were leaning into the energy before the outbreak of war in the Gulf, attracted by valuations. Thanks in part to this, the NAV was up another 25% by the end of April 26. Commodity demand remains well supported in a world of high inflation, political tensions, and reshoring of production. Demand for gold looks likely to remain due to fears of currency debasement and political repression, while governments continue to make new commitments to nuclear power, which require more uranium to be mined. We like the strategy of looking for areas that are out of favor and trying to get ahead of the market, as commodities and their equities can be very volatile, with sharp changes of direction. So playing momentum is a dangerous game. In particular, the move into energy when it was out of favor has paid off in unexpected fashion following the outbreak of conflict in the Middle East, and shows how this strategy can work. We think exposure to these strong commodity themes in the current environment is attractive, especially if it can be accessed at a discount to NAV. To keep updated on CQS Natural Resources, Growth and Income, head to the Kepler Trust Intelligence website.